Those were the headlines that we're tracking for you this evening. But on what's brewing today, Bangalore-based full-stack consumer engagement platform Exotel has turned a profit with positive EBITDA in the third and fourth quarter of FY24. Now, the company pared down its annual losses by 65%, while revenue inched up from 420 crore rupees to 445 crore rupees during the same period. Now, started in 2011, Exotel allows companies to manage customer engagement through an omni-channel contact center, a suite of communication APIs, and a conversational artificial intelligence platform over the cloud. Joining me now to discuss this further is Adarsh Dikshith, the CFO of Exotel. Adarsh, thank you so much for taking time out and being here with us on Startup Street. And congratulations on this feat that you've achieved as well. So as I just pointed out, you turned a profit in FY24 and managed to see revenues also inch up marginally. If you could sort of take us through what contributed to your growth in this financial year?
Sure. Thank you for having me on CNBC. Just a small correction. We have reduced our losses in FY24 compared to FY23. Of course, we are aiming at profitability in the coming years. With that context, what has changed for us in FY24 that led to obviously a drop in our losses by 65%? One, of course, is our leverage or our margins. Our margins are very respectable in our industry. In fact, perhaps the best. Then, of course, would be the balancing of our capacity that perhaps was true for most of the companies, not just us. With the demand tapering, quite naturally, we had to balance our capacity. So we had a forward view of that way back in early 22-23, and we were able to execute those. And quite naturally, because of that, we were able to reduce our losses without compromising on our gross margins.
Right, absolutely. And are you on track to maintain this for FY24? If you could sort of, take us through what you will double down on in FY25 and your targets for the year as well?
Well, I may not call out the targets for FY25 because we are a private company. To that extent, I have to be mindful of it. But I can certainly say that our path in FY25 certainly is to further reduce our losses. In fact, we will be entering into the profit zone in FY25 and way beyond that. And that continues largely from our optimization of our margins and further optimization of our capacity. So those two continue. But most importantly, in FY25 or even in good part of FY24, the focus on high gross margin products and innovation, certainly these two have given us the segue for better margin profile in FY25 and beyond that.
Right. And, you're a full stack consumer engagement platform, right? So you've been talking about these high growth products that you have. So can you take us through what you have on offer and what's the tech edge that you have and any new products in FY25?
Certainly, yes. In fact, the space that we are in is up for disruption because of AI. So wherever you have disruption, obviously there are opportunities. So to that extent, most of our customers are asking for the AI supported products. To that extent, we already have a customer base whose needs are something that we understand really very well. We understand the journey very well. So to that extent, we have augmented our product with the AI intervention. So that certainly is a hedge, not only just in terms of protecting our margins, frankly, and also to expand our margins. So if I were to call out, the intervention will be largely in terms of how do we bring AI into our existing products and as well as an additional AI intervention to create value for our customers.
Right. And if you could sort of take us through your presence, then you're present, you saw massive expansion in the last year. So you're now present in UAE, Saudi Arabia, as well as the US. So what's the expansion plan for this year and how big of a market will India be for you? If you could also tell us, the revenue mix between the geographies?
Oh, certainly. India, which is domestic market for us, continues to be a very exciting market. The growth opportunities are certainly limitless for us or for many of those who operate in Indian market. So Indian market will continue to be of great interest to us. And we certainly see growth coming from the Indian market. Having said that, international expansion is also a natural adjacency for us. So to that extent, UAE or the Kingdom of Saudi Arabia, and Africa, Indonesia, or the Southeast Asia, these are all quite exciting markets for a variety of reasons. Number one, these markets are growing as we are growing. The problems that they are trying to solve in terms of customer engagement and customer experience is quite similar to what, let's say, the Indian domestic market has solved and continue to solve. So we already have product stack that we have established in the domestic market, and successfully so. So taking this to the adjacent market is a very natural act. It's not a leap of faith for us. It's a natural progression for us. So, the international markets hold great promise for us in terms of our ability to go and sell an established product that we have in domestic, and adoption rates should also be quite significantly high in international markets for us.
Right. And what about the clients you cater to? You have over 7,000 clients globally, facilitating over 25 billion conversations, right? So if you could expand on how you plan to grow this further and your client acquisition strategy, as well as, the kind of efficiencies you've created for your clients.
Well, let me break this question into two parts in terms of, let's say, how do we expand the existing customer base? The good thing about our business and our customers are we are very naturally intertwined, meaning to say, if our customers are growing organically, we automatically grow with them in the sense like, while of course we have to continue to innovate our products and continue to offer best-in-class services, but the arrangement or the relationship is quite symbiotic, so to speak, in a sense like if they grow, we absolutely grow, of course, with products and quality of service. I must emphasize. So to that extent, the growth is in some sense secured with the growth in our customers. And of course, the other part of the growth will continue to come in terms of innovation of products that we continue to offer to existing customers and as well as net new customers that we intend to acquire. So good part of growth will certainly come from our existing customers who are marquee customers. And of course, with the new products and our ability to create a differentiation for ourselves, that should really promote us in terms of acquiring the net new logos.
Right. And, you've raised close to about $100 million in funds till date, right? Are you looking to raise more funds in the near future?
No. We are well funded in terms of our balance sheet. So our business, and as I've said, we have become quite efficient and, our capacity is quite aligned to demand. So to that extent, need to run our existing business, i.e. the capital, we don't see the necessity.
So you don't need this. You don't see the necessity right now to raise any funds. You're well capitalized, and you have big growth projections as well for FY25. But Adarsh, thank you so much for joining us on the show today, and we wish you all the best on this journey going forward.
Thank you. Pleasure is all ours, and wish you best of luck as well. Thank you.
Thank you. Moving on, homegrown hair